Core data to watch. Last week, US inflation numbers surprised the market participants. Both consumers and producer inflation eased to decrease the concerns and lift the stock markets. In the week ahead, we will have more inflation data to watch from other developed economies as well as other economic data to watch and see what we have to expect from the central banks in their September meetings. Let's review the most important data and events to watch in the week ahead with me, Ahura, and MC Markets. Number 1, China on Monday. The week will start with the massive economic data from China. House price index, fixed asset investment, industrial production, retail sales, unemployment rate, and National Bureau of Statistics of China press conference will be the events that can tell us more about the current economic condition in China. Economic growth in China has slowed down to some extent, and if it continues, can slow down the global economic growth as well. Number 2, Canadian inflation. Canadian inflation numbers on Tuesday will be very important as one of the developed economies and also because of its close relations with the US economy. There are some measures that have been taken by the central bank, and decreasing energy prices are expected to slow down the July inflation to 7.6% annually, down from 8.1% in June. However, it would be still so high, and more likely officials in BOC will continue their rate hike policies. These data will put the Canadian dollar in a bit weaker positions. Number 3, Reserve Bank of New Zealand. RBNZ will hold its monetary policy and interest rate decision meeting on Wednesday. It's so likely that the Reserve Bank in New Zealand to boost the rates by another 50 basis points as its third consecutive rate hike. The expected policies are supposed to lift the kiwi against its rivals, while the market participants also anticipated another 50 basis point rate hike in the next meeting. Number 4, EU or European ZEW surveys. The August ZEW surveys are to be released this Wednesday. The ZEW surveys looks to capture sentiment regarding the current state of Germany and Eurozone economy, as well as where consumers and manufacturers expect the economy to be in the next 6 months. While these data were in the negative territory in the recent months, we are expecting to see some developments, but still in the negative territory. Expected data is supposed to help the euro against its crosses this week, but it would not be enough to create a bullish wave. Number 5, British inflation. The impact of war in Ukraine continues to be whispered in the European economies. Despite other major economies, we are expecting that inflation in July continues to grow as energy prices continue to move higher because of favored exports from Russia and supply shortages across the continent. The overall expectations is to see the CPI raised by 9.8% in July, up from 9.4% in June. We have producers, raw materials, and house price inflations to watch as well. Expected data are supposed to put a little bit more pressure on the London stock markets. And finally, number 6, US data. Building permits and housing starts on Tuesday, retail sales and FOMC meeting minutes on Wednesday, and Phil Fed index on Thursday will be the most important data to watch in the US calendar, while some FOMC members will also give speeches, which will definitely be important to watch. This week, market sentiment more than anything else will affect the prices, so we have to watch and see how investors will react to the published data. However, the overall expectation is to pause the uptrend and digest the data before any new trend formation. Thanks for watching this video and hope this week is going to be an amazing week for all of you.